Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Canoo, ticker symbol GOEV. And so here I am recording this on the morning of Tuesday, August 20th, before the market opens. And Canoo closed yesterday, August 19th, at a price of $1.40, being down about 6.67%. And so I wanted to go over the chart because it's been a while since I've done this. The last video that I put out was on July 4th, so on the holiday. And so that was following the trading day of July 3rd. And during that video, I suggested that Canoo was having a breakout. And from that day, following that day, we actually pulled back about 6% on the 5th. And then from that, though, we moved up about 26%. So pretty nice move there. But from, when the last time I put out the video, we came down about almost 40%, and from the top it was actually about 50%. So, not looking so good there. But there are some things, really one thing in particular that does stand out to me as being fairly compelling, that this could be a fake out break below these levels. Hopefully we can reclaim them soon, but if not, there are some levels to the downside that we might be hitting. And so the thing that stands out to me as suggesting there is some strength in the stock is that if we look at this uptrending level based on these two pivot points, one being the low that was hit on March 14th, Pi Day. I have fun with that one. And then also this other low on June 14th. Oddly, whenever I've been drawing these lines, it happens to be the same date, 14/14. So kind of weird there. But looking at that trend line, the thing that really stands out to me as being really, really interesting is that on the 5th, when the market collapsed, we gapped down over the weekend and then a lot of stocks bounced. Canoo was not making new lows there. The 52-week low remains $1.22 over here. And so on the 5th, we hit a low during market hours coming down to 154 and actually bouncing off of that uptrend. So I find that to be pretty compelling that it didn't break lower than 144 or 122. If we actually do look over at the 1 hour time scale, just to get an idea of how low it went. Yeah, look at it right there. I was initially thinking maybe this one that went down to 124 on the pre-market trading on August 14th, but actually that dip was on the pre-market of the 5th over here, and we saw it come down to a low of 154. So, that suggests to me that these levels, are potentially acting as support. But it is a little concerning that we did close below 144, and that is not the first time that we have done that. So this could actually be potentially a confirming break. Let's have a look at this. So on earnings day, which was the 14th, we hit a low during market hours of 140. And so I would think that a close lower than that would be confirmation of a break below 144. But we got this close of 140. So I would say it's good to not get another close below 140. And then now, though, we have this newer low here of 137. Definitely don't want to be seeing a close below that. But if we do, we might be pulling back down to 122. So I'd look for that. But I could see this, as a potential fake out break below this uptrend. I think a lot of people are probably pretty anxious with this. And so hopefully we can reclaim that. I would say getting up to a price of, let's just look here. The high on the 15th was 157, getting back up to, 160, closing above 160. That would potentially be a reclaim of that uptrend, and that, we're looking at dip buying zone where we are currently at. But if that's not the case, if we do start to see confirmation breaking below 144 with the close, clearly below 140, especially clearly below 137, coming down to 122. And so what are some other levels that we can look at that might reinforce 122? So I was drawing up a few things on the chart trying to get an idea of, levels that we might be considering. And so one thing that we can do is drawing a retracement from the low of this little move up here, going from that low hit on April 12th up to the high hit on April 17th. We have this Fibonacci retracement, all of these levels. Probably not anything too significant there as far as levels looking forward, but one to the downside is the 1618 at 119.2, coinciding, just a little bit lower than 122. So maybe that is a level that we want to look to. Maybe we wick below 122, hit 119, but then bounce, get a close above 122. That might be suggesting that we're forming a double bottom there and could be going higher. And then another thing that I can do is draw a trend line from this low here at 207, connect it to the bottom of this candle hit on June 25th. And maybe that does suggest that this trend line, even though we got this wick below, we closed above it. So I do still feel like that level is being respected. And looking forward, that does intersect with not only 122, but also the 1618 at 119.2. So maybe if we are closing, if we are breaking below 144, 120, right around there, maybe we find support, form a double bottom. So, a lot of confluence of levels there. That does suggest to me that that could very well be the bottom, and maybe we start to reclaim this uptrend, start to get back to these levels to the upside. But if not, if we start to close below 119, I feel like this is probably going to $1 a share, so do brace for that, but all hope is not lost. I do think this could be a fake out, but if it is not, 120, 119 could be support. But if not, again, look for $1 a share. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.